Hello, everyone, and good morning, and welcome to today's live session here on welcome to today's live session on YouTube. Thank you so much for joining us today. Thank you, and thank you, and thank you. Thank you to everyone who have joined us. Those who joined us quite early. Emmanuel Obadio joined way before time. Maybe she didn't understand the timing. Thank you so much, everyone who is here. Mrs. Banke, thank you so much, Ma. And thank you so much to every one of you that would watch this now and will watch it even later after this live session. Thank you so much. My name is Chuka Mekojinezi. I'm the founder of the Naira Academy. And today, I want us to discuss how to start investing in stocks as a beginner, right? There's certain things we need to do before we start investing as a beginner, and that's what I want us to look at today. Okay, all right. So thank you so much. Welcome back. Yes, I see Madam Biokis Adamo again. Thank you so much, everybody. Thank you for being here. Happy to have you all here today. I see both January and March cohorts people here. Thank you so much to you all. All right. Okay, so today I want us to talk about how to start investing in stocks as a beginner, right? What do we need to do to start investing in stocks as a beginner? Because I guess there are a lot of beginners in the house. Yes, there are. Okay. All right. So, a lot of people delay investing because people think they need a lot of money. People think they need plenty money before they can start investing, right? People say, oh, I just don't understand the market, I won't invest, right? People say, what if I lose everything? What if I go and invest now and I lose everything? Maybe they even have stories of people that lost everything. So they are scared of investing, right? But the truth is, you don't start investing because you are ready. You start investing or you become ready because you start. So you don't start investing because you're ready. You become ready because you start. So you need to start, you need to take the step. And that is what is going to ensure your readiness. So readiness is a decision. It's a decision that starts from the day you make that decision to start. All right. So let's look at it in a very practical way. Let's break it down. So the first things first that you need to do is to fix your foundation. You need to fix the foundation first. Before you say, oh, I want to invest, right? One thing you must do is fix your foundation. And this is what a lot of people skip. When we say invest, people just rush in, get on the platform, start investing, right? And that's why in the Money Click program, right, we we don't just jump into investing, right? We go through a process in the Money Click program. And that process first starts with your money identity, right? Understanding your money blueprint before we now take you on to understanding money management and understanding how your blueprints affect your money management and how you can begin to correct it. And then we now look at budgeting before we even start getting to savings and then start talking about investing. So it's a process, but most times we want to skip that process because sometimes we're in a hurry. When in a hurry, you just want to do it sharp, sharp. That thing of Jehovah sharp, sharp is in us. But there's a process that we should follow, right? But that process is first to fix your foundation. Fix your foundation first, right? Don't skip it. So before you invest, your financial life must have a structure. It must have a structure. See, if you don't have a structure before you start investing, right, that investment will not last. It will last. We had a class about this some time ago where I listed 3 major things that must make up your foundation before you start investing. If those things are not in place, trust me, I give you just a few months, you liquidate that investment even before it matures. Right? What are those 3 things? First thing you need to do is build an emergency fund. Right? You need to have an emergency. See, if you do not have an emergency fund, I've given examples about this with my own life. It has happened to me before. When you don't have emergency funds and you go on to invest, when you're hooked, right? When the real emergency, you liquidate that investment. It won't get to maturity. It won't get to maturity. I see you, ma, from Ireland. Welcome, ma. You will liquidate that investment. You will. You will liquidate it. I see you, everyone. Yes, Madam Mercy, Mr. Chris. I see you all. Welcome to this class today. Welcome. All right. So you should have an emergency fund. Some of us, any little parara that happens to our finance, we are off balance because we do not have a buffer. We don't have a buffer, right? Especially for those who joined in the March cohort, there are certain videos that I've made in the past that I'm going to share with you for you to watch, right? To understand, how to begin to build up these things. But emergency fund is one of those things that nobody should play with. Everybody should have it, right? And what an emergency fund? We say it is having money that can cater to 3 to 6 months of your living expenses. Now, let's say, for example, that in a month, what you spend, now take away what you save, what you spend to cater for your needs in a month, you spend about, let's say, 2,000, right? 2,000, whatever currency you want to add to it, to spend 2,000. Now, it means that what you need to save as your emergency fund every month, what you need to build up as your emergency fund is 2,000, at least is 2,000 times 3, which is 6,000. Then if you want to be in a very comfortable position, you need to have 2,000 times 6. So that's about 12,000. That's what you need to have. So what it means is that if something happens to your income, remember your income is not 2,000. Let's say your income is 4,000 or your income is 5,000, but your living expense monthly is 2,000. Now, when you have up to 3 months of living expense and something happens with even your job, it means that you're going to have some time to put yourself together before the next job, right? It means that you have a buffer. You have something that can give you grounding to even help you settle in to get a better job. See, most times the kind of jobs we jump into is because we are in a hurry, right? And when you're in a hurry, you do not settle in to make the best decisions. So you take your time, you have up to 6 months living expense, and then you get the right job. That's not just what it's for. It's for also emergency expenses. There are expenses that would come up that you didn't budget for, you didn't plan for. It could be medical, it could be anything. You didn't plan for it. Where the money comes from is your emergency fund. The problem is when you don't have emergency fund, you don't have any cash at hand, what happens is that you go to those investments and break it. That's why emergency funds are important. That's why emergency fund is foundational. It's foundational before you go on to start investing. It's foundational, right? The next thing to put in place as a form of foundation is to eliminate your high interest debt. If you have a high interest debt, please settle it first, sort it out before you start investing. You cannot have a debt that is growing faster than the investment where your money ought to be growing. You can't put your money in an investment that is giving you 10% return per annum, right? Meanwhile, your debt is compounding by 18% every month. Every month. So you need to eliminate the debt first. Take the debt out. So if you have any debt that you know that's a high interest debt, please sort out that debt before you go on to invest. If not, the investment no go last. Let's just be realistic. Yes, we all want to invest, but there are certain things you must do. The foundation must be strong if the building will stand. If the foundation not strong, the building will fall. The foundation is all these things that I'm listing out right now. The next thing you need to have in place is a stable income. A stable income. Right? You need to have a stable income. And the reason why you need to have a stable income is so that you know that this money you're using for investing is not money you're depending on for tomorrow. When you don't have a stable income, it means that, if you invest this money tomorrow, the next day you might not have what you used to eat. And when that day comes and you don't have what to eat, you liquidate the money and use it to eat. So your income needs to be a bit stabilized, right? And your income stabilizing is not just dependent on you earning salaries that is stable every month. There are people who run businesses, and I've explained this thing before. There are people who run businesses, right? And you have peak periods in your business. Now, what you do is you properly plan so that the peak periods will take care of the periods where you don't really have that much sales. What do I mean? What I mean is, for example, your peak time, your peak sales come in December, for example, right? Now, what it means is that when you make that high sales in December, assume, sometimes just assume that December is the only month that you have. Now, take the money from December, spread it across the rest of the month, and start paying yourself little by little. In addition to what the months that are coming are going to make for you. When you do that, you have, in a way, stabilized your income. But what a lot of people do is that when that December money comes, even though they know that January, nothing really comes in January, they spend everything in December, and January they are crying that there's nothing. You need to be able to use the money that is coming in during the peak months to set out or sort out the money that the months that money doesn't really come in that much, right? So that's about stabilizing your income. That's about stabilizing your income. All right. So you need to build an emergency fund. You need to reduce your high interest debt. You need to have a stable income. If you don't have a stable income bar and you are investing, or in fact, if you don't have all those three things I've mentioned that you're investing, you'll be panicking anytime you see prices are dropping in the stock market. You see when people invest and every hour they're checking their investment accounts, right? They're checking their portfolio every minute, every hour they're checking it. It's because they've used money that was meant for something else to put into that investment. It is because they do not have a good foundation. So they're wary. They're wary. See, when you have a solid foundation for a building and you start building it right up, you're not scared about anything because you know that the foundation is strong. So eventually the building will stand. But when you don't have a strong foundation, as you're laying on the building, you're looking from one end to see, the thing for, is it shaking? So you need that foundation in investing. And that foundation would make you, even if prices are going up and down, you're calm because you know that money, you don't need it now. You don't need it today. You don't need that money right now. Even if that money should go right now, you know that, you still have other sources that you're dependent on. You know that your foundation is strong. You have emergency funds. If anything of emergency comes up, you have a stable income. You know, you don't have any debts hanging around your neck. Right? So it's key. When you don't have all these things in place and you go on to invest, you will withdraw your money too early. You know, go mature, you come out too early. You're going to withdraw your money too early. Right? You withdraw it too early because you're eager. Like, for example, for those who want to invest and they say, I want to put my money in now, and I want in the next 12 months, I will bring it out. That is not investing. You're going to be in this boat of checking this thing there because you know that in 12 months' time, you need that money. Right? Like somebody once told me that somebody had money to buy a car. Right? And the person came to me and said, where can I put this money now so that in 6 months' time, I can have my money for my car and I'll have extra from the investment? Where can I put it to double? I said, I don't know. I don't know where you can put it to double. Because that is the wrong mindset for investing. It's a wrong mindset. And that is going against the principles that we're talking about right now. Because it means that if anything should happen to that money, your money for your car has gone. Maybe, according to the person, it was even money that the husband gave to her to buy the car. So you're going to be under a lot of pressure. Right? And when you don't have your foundation in place, you start making decisions based on emotions. Stock market just did small. You're panicking. You panic and you sell. I remember what I always tell you about selling. The moment you sell is the moment you lose. If you don't sell, you don't lose. But what will make you not to sell is this foundation that we're talking about, ensuring that your financial foundation is strong, right? So investing without all this is like building a house on the sand. That's what it is. A lot of times people don't like to hear this part of education, this part of the education and financial literacy, because they just want, oh, I want to invest, show me the app, boom, the landing, start putting in their money. And then before you know it, even before the year runs out, the whole investment, they'll withdraw it out. Anyway, let's move. Number two is understand what the stock really is. Right? Before you start investing, understand what stocks really are. A stock is not a number on a screen. A stock is not a quick money opportunity like a lot of people think. Somebody came to one free group that I run, and the person said, was asking me a question. The person said, which stock can I buy now that can double in 3 to 4 months? I said, I don't know. I do not know. I can give you that answer. Right? It's not a quick money making scheme. It's ownership in real business. Right? So when you're buying a stock, you're asking certain vital questions. What does this company do? How do they make their money? Will this company exist in the next 10 years? We talked about this particular one yesterday. Will this company exist in the next 10 years? Right? When you have this shift in mindset, it separates you from gambling in the market. It moves you away from gambling in the market. Number 3 is to start small. Start small, but start now. Start small. A lot of people say, I'm going to start investing when I have more money, when I start making more money, when more money comes in, more money. You don't have to make more money before you can start investing. You can start with 5,000 naira. Convert it to whatever currency you have in any part of the world. Yes, you can start with that. You can invest with $5. You can invest with $5. You can invest with 10,000. You can invest with 20,000. The goal is not the size, right? The goal, the most important goal, especially if you're somebody who is not used to it, if you're somebody that you've not been investing, you've never been used to investing, the most important thing for you in your first 1 year is not the amount. Your goal is to build the habit of investing. The goal is the habit. Right? And at the end of the day, consistency beats intensity. Somebody who starts investing 10,000 naira from age 20, listen though, 10,000 naira from age 20 consistently every month till the person is age 40 would have more money from his or her investment than somebody who starts investing from age 30. But instead of investing 10,000 naira, the person is investing 25,000, more than double. The person who started early with 10,000 would have more money than you by the time you all get to 40. That's the power of compounding. It has to do with starting early. Right? Starting early. Number 4 is use a trusted platform. Coincidentally, somebody asked me a similar question like this today, and I just said, let me wait till this class. Let me wait till this class, and I'm going to give a response. And I don't know if the person is here today, right? One of the things you must do before you start investing is to use a trusted platform. So we're not saying get on an investment platform and you just go to anyone. There's one word you must hold dear to you when it comes to investing, right? Or rather a phrase, due diligence. Before you do anything when it comes to investing, you must do due diligence. You must make your research. You must understand these people when you're choosing a platform for investing, your focus first is security, protection. That's your focus. Protection. You need to make sure you're putting your money in a place where you will not lose it. You need to make sure you're putting your money in a place that is not a scam. Because there are a lot of people today that are creating platforms just to scam people. Right? So for you to invest, there are two major things you need to do. Right? There are two things you need to look out for. You need to look out for, you need the licensed stockbroker. You need a regulated investment app. Now, when you're choosing the platform you want to use, you want to find out these two things. One, is that platform a regulated investment app? Is it recognized by the authorities? That's one. Number two, that platform, are they stockbrokers or are they working with a stockbroker to bring these services to you? You can't be investing in the stock. You can't be investing on a platform that claim to give you access to the stock market, but they do not have any relationship with any broker, or they are not brokers themselves. That means that you are making a huge mistake. So even when you download the platforms, before you go on to invest, go to the about the platform, go and read up about it. Find out the who the brokers are. If you have done this before, right, then you would realize that platforms like Bamboo, platforms like Trove, they themselves are not brokers. They work with other stockbrokers. For example, Trove works with ARM. Some people call it ARM. Right? Trove works with ARM. That is the broker that they use. So invariably, when you open an account with Trove on their platform, the person who gives you your stock certificate, right, comes from the broker. That broker is ARM. The same thing even for their foreign stocks. I think the foreign stock is, I think there was, forgotten the name, something Wealth Drive or something. They have a company, stockbrokers in the US, that they liaise with for you to be able to stay here and buy stocks in the US. These are things you must look out for. Right. I won't be able to tell you all the platforms and who they are affiliated with, and it is your job as an investor to find out this platform that I'm about to use, is it regulated by the authorities? It is your job to find out this platform I'm about to use, are they stockbrokers or are they affiliated with any stockbrokers? So you need to make sure they are legitimate. Right? Another thing you need to make sure is that it's a platform that is easy to use. There are stock platforms that are just unnecessarily difficult. Unnecessarily difficult. I'm not going to mention the name, so I don't demarket them. But there's one particular one, and it's Nigerian based too. But it's none of the ones I've mentioned before. I've not mentioned it before. Right? Unfortunately, on that particular one, you can't even buy foreign stocks. But it's unnecessary. It's just too much. It's not user friendly that way. Right? Another thing you need to look out for, which is very important as you're choosing your platform for investing, is the fees. Look at the fees, look at their charges. What is the commission they are charging you per trade? What commission are they charging you when you buy? What commission do they charge you when you sell? You need to look at the commissions. Right? You need to look at how much they're charging you. So find out how much they're charging you. So you need to compare. Okay, if I go with this platform, how can you find out? By even simply Googling it, you're going to find out. Just Google so and so platform. How much do they charge for commission for completing trades, for completing buy orders, for completing sell orders? You will get a feedback. You will get the feedback. Right? You'll get the feedback. So know how much they're charging you. There are platforms that charge unnecessarily too high. Just there's no need being there. If you have a platform that is charging unnecessarily high, and you have a platform that is charging lower, you make a choice. Sometimes I've also got to notice that there are platforms that charge a little bit higher, but their services are more seamless than the one that charge a bit lower. The ones that charge a bit lower, sometimes the services just keep dragging. Maybe you want to put in a sell order, it just doesn't go. Things are not just smooth on the platform. So you need to look out for what you want, right? And pick. But ensure you're not going for the ones that are charging unnecessarily high, right? And then avoid anything that promises guaranteed returns. See, any platform that tells you when you invest with us, when you come to our platform, whenever you see this kind of adverts, you have guaranteed 100% return on investment, 20% on investment. Once they start saying this, please run, run, run. Clean your slippers, your shoe, and run. Right? And run. Whenever they start guaranteeing you returns, please run away. No genuine investment platform for the stock market will guarantee you returns. None. Because they know it is dependent on you. Their job is to give you access. But when they start telling you, no, we'll invest for you, we'll do this for you, you will get this amount of money, you were sure you will get this, please, it is not true. You're no longer doing stocks. Maybe you're doing Ponzi, but they will come in the guise of stocks. Please run away. Okay, let's move. Number 5, focus. I think I've spoken on this, how to choose your platform. So please do your due diligence before you choose your platforms. My approach to teaching is a way that I want you to be. I don't like when I just teach and people just take in everything that I teach. And that's the reason why I want you to learn, so that in case I make a mistake, tell me that I made a mistake. If I give you a platform that is not proper, tell me, oh, I went to read about this platform. This is what I noticed about it. Is there a reason why you chose it? Did you see this when you were choosing it? Right? Did you choose this? Did you see this when you're choosing it? Or, coach, this platform you said we can use. I noticed that the charges are high. Is there a reason why you chose it, even though the charges are still high? These are the kind of questions I want to get. It means that you're doing due diligence. It means that you are. My work, my job is to train you to think like an investor. That's my job. Right? Is to train you to think like an investor. I want you to think like an investor. I want you to begin to see things. I want you to begin to criticize certain things. Why is it so? Why do I need to do this? For example, from this Friday, that's tomorrow, we're going to share stock picks for the first time this year, right? For the January cohort. The March cohort, it will come to you, don't worry, when we get to that stage, right? Now, these stock picks, I want you to be able to ask me questions. Coach, why did you choose this particular stock? Because according to my research, I saw so and see this about this company. Do you think they will stand there? I need critical questions. That is what I need. I need questions that will push me, questions that will show me that, yes, you will now know more than me. I want you to know more than me in this thing. And that's also the reason why I'm telling you to come and learn from the How to Make Money from Stocks webinar. Come and learn. For those who are in the Money Click program, yes, as you well all know, I give you stock pick. I take my time. I research the stocks and I give it to you. It's more like spoon feeding. That's part of what you get when you join the Money Click. But that's not the goal of the Money Click. That's part of what you get. So we give it to you and we tell you this stocks you can invest. And trust me, there's nobody that has invested in any of our stock picks that have come to say that this was the wrong choice. Nobody. We usually put entry points, and like last year's stock picks, they've all, apart from, I will give it a 90% success rate. They've all surpassed the entry points that we gave. Before we choose companies, we don't just choose stocks. We look at the companies. I take my time to study the financial statements, the cash flow statement, the balance sheets. So I don't just come up with list and give to you. And this is also what I want you to be able to do. But you can't query me on this if you do not take the time to learn it and understand it. If all you want to do is for me to feed you with the stocks for you to buy, right? Then that's fine. I'll keep feeding you. But I don't want to keep feeding you. I want you to be able to also be able to arrive at those stocks the way I did. That is me teaching you to think like an investor. I want you to be able to do what I did. Right? And that's why I'm still talking about the how to make money from stocks webinar. Right? So I want everybody to be there. I want everybody need to be there. You need to come and understand certain things about the stock market. Yes, even before that class, we are still going to have another class on the stock market in the money click. Yes, next second Saturday for January cohort. Yes, we're going to still have talk about the stock market. The March cohort, don't worry, yours is coming. Everything we do in the January cohort applies. Everything we will do it in the March cohort, right? Everything, every single thing. So in case you're asking or wondering, is it just January cohort? It will come. We're working with the curriculum. So at the end of the day, we would make sure that we apply the same thing to you. The only thing is that you won't be able to do it in the same time. That's the only difference. So register for the How to Make Money from Stocks webinar. The registration is ongoing. Please take a step, right? Beyond what we're going to teach in the Money Click, even though it is to be enough by the next class for you to start investing, go the extra mile. Go the extra mile. Learn more. I want you to be curious enough to say that thing that will be taught in that How to Make Money from Stocks. I want to know what it is. Even though I have enough to get me started right now, even though I have enough to solidify me to begin in the stock market, right? But this one that is happening there, I really want to know also what they're talking about there. There's no waste in knowledge. There's no waste. All right. So, it's important that we take that step to learn. It's important that we learn and we learn indeed. Right? We learn and learn indeed. A lot of people might not realize it, but quite a lot of things that I get to teach you about the stock market, right? I get it from certain books. An example of the books where I get do my research from, and I come up here to teach you, is The Intelligent Investor that we also read in the Money Click program. The March cohorts, don't worry, you're reading the book next month. The Intelligent Investor, and so many other books also that I get to read, because I can't recommend all of them in the Money Click program for us to read at the same time, right? But what I'm saying is you can be at that point where you are able to critique things, where you are able to think independently, where you're able to ask the right questions. But it comes from you putting in the work. It comes from you being curious. I need you to become curious and more curious. In your free time, just read up something about the stock market in your free time. That's how you build it up, right? Make it a habit to begin to watch business news. Some of us, at the time when we listen to news, when they get to business news, that's when we turn off the TV. I used to be that way. Growing up, I would say it's a tradition or a habit in my house that we listen to 10 o'clock news every day. So we started with 9 o'clock news on NTA, right? So NTA used to do 9 o'clock news every day. So we used to watch it. My mom made it compulsory. Everybody must watch 9 o'clock news. After that, we pray and we go to bed, right? Then eventually NTA became more like I don't know. Their content was too pro government, because it's government owned. So we moved away from NTA news and we started watching Channels television. So 10 p.m. every day. That's the last thing we listen to. We watch Channel TV news before we go to bed, right? And I watch some others that are apart from Channels, but my parents still watch Channels TV news every day, 10 p.m. They don't miss it. That's the last thing they watch before they go to bed, 10 p.m. But here's the thing about it, why I'm even talking about it. Growing up, watching that news, once it gets to the part for business news, even my parents, everybody, it seems like news has ended. So I had to start making conscious efforts to begin to start listening to those business news. Why? Because as an investor, you need to know what is happening in the world of business. I had to make conscious effort, deliberately start watching CNBC, right? Those channels that are dedicated to business, you need to watch them. You need to develop interest in them, right? It's going to take some time because you maybe like me, you might not have been wired to have interest in those things. So you need to consciously create that, intentionally create that interest in you, right? Intentionally. You need to intentionally create that interest in you. Yes, thank you so much, man. Yes, this is what I'm talking about. Intentionally listen to news at 9 p.m. daily. Thank you so much. Yes, that's exactly what we do. So, but as we're listening to the news, let's also pay attention to the business news. Growing up for me, it was once the normal news is done, then they will do sports news. So somehow they put the business news last. Maybe because they feel it's boring. I don't know. Once sports, they've talked about sports news. That's it. Interest gone. It's almost like shut down the TV. Just shut down the TV. Anything that has to do with business programs before, I'm not interested. But now, that's the first thing I want to watch. That's the first thing I want to watch first. Right? Okay. All right. Okay. So let's move on. Let's move on. Number five. Number five is focus on simple, understandable companies. So as a beginner, don't go for something complex, right? So there's something Warren Buffett to say. Warren Buffett says, never invest in a business you cannot understand. I've said that before a lot of times. Never invest in a business you don't understand. So start with businesses you already know. Start with businesses you already know. What do you know already? See, remember, it's all about the company when you're investing. It's all about the company. So there are companies that you know already that I know this company. I know, well, they know them well. What are we talking about? We're talking about the banks. We're talking about the telecom companies. We're talking about some consumer goods companies. Start with the ones that you understand. Right? Don't go for one that will tell you that, okay, maybe you don't understand it too. That they say that they build some kind of aircraft that is futuristic, that is going to take off vertically. You don't even understand what they mean, what they're talking about, but you put your money in. Right? First things first, understand the business, not the stock. Not the stock. Not the stock. Not the this comment is cracking me up. Mrs. Mercy says that in the business news, the reporters are always speaking fast, like they are hiding something. Really, do they speak fast? Or it could just be that same lack of interest because I think for all the news, they all speak the same way. I think they all speak the same way, but it is where you have interest that you will hear. It is where you have interest that you're going to pick. I don't think. I don't think they're speaking fast though. I think it is. I think it's where your interest lies. So it's still that thing of interest. So when it comes to that, I think somewhere somehow our minds will just find one excuse as to why we are not picking or listening to whatever it is that they're saying. You know. Thank you so much for sharing that, man. Oh my God. All right. So moving on. So I said so now focus on simple, understandable companies. Focus on companies that you can understand. Companies that you can understand. Start with the banks. For example, most times when people come to me and they say, I want to invest, this is an expo. When people come to me and say, I want to invest in a company in Nigeria and the Nigerian stock market, I say, start with the banks, the big, strong banks. Because first, they give you protection. Two, they give you high dividends. And one thing we need to understand about the Nigerian economy and most developing economies, they are built, the banks are strong holders, commercial banks are strong holders of the economy. So something happens to the economy tomorrow, the banks will be the last to fall. No, I'm not talking about banks that do not have strong footing. No. I'm talking about the big banks that have very strong footing. The big banks that have strong footing. Right? Start from there. And the good thing is they are also good, they pay good dividends as well. They pay good dividends. Start from there. Start from the telecom companies. You know, they are not going anywhere. We're in a developing economy. The telecom companies are going nowhere. They're going to be here. We need them. We need them more than they need us. Right? We are in a developing economy. We are still building a lot of infrastructure. We will always use cement. For the next how many years to come, we will be dependent on the cement industries that we have. They're not going anywhere anytime soon. They're not going anywhere anytime soon. All right? So start with what you can understand. Number 6, don't put everything in one place. I'm sure we've heard this one a lot of times. I've heard this one a lot of times. Yes, banks give protection and they pay high dividends, not just in Nigeria. One of the highest, if you look at, for those who were in the Money Click last year, right? Um, if you look at one of the highest dividend stock that we recommended last year, US stock recommended last year, was actually a bank. Let me see if I can quickly pop that up. It was actually a bank. It was a bank, right? It was a bank in America. So it's important that just start with them. Just start with those banks, right? They give you that protection that you need. Trust me, they give it to you. I'm trying to get the name of that particular bank. Trying to get the name because that bank, um, as a last year, okay, it wasn't the highest. It was like the third highest, dividend rates giver that we recommended. Columbia Banking System, right? It gives pays about 5.6% dividend rate. 5.6% dividend rate. Now, let me shock you. Let me give you, let me shock you now. Apart from the fact you would have been earning 5.6% dividend rate on that investment if you had bought it. By the time we recommended that people should buy into that Columbia Investment Bank, right? Columbia Banking System. By the time we made that recommendation, they were selling at 12. We recommended that people buy at, they were selling below, oh no, a little bit above $12. Eventually, it came to $12 and it went up, and it's been up since then. Today, from $12 that we recommended people should buy, today it sells at $27. I haven't checked the recent dividend rate. It's selling at $27 today. So you'd have gotten your dividend pay, you'd have also gained from the capital gain. And that's why most times when people say, which stock should I buy or should I get? If you're in the Money Click program, just go for the stock picks. Look out for it tomorrow when we share the updated copies, right, for 2025, right? So look out for them. Go for the stock. We don't just wake up and just give you these things. It's weeks and weeks of research, right? And with time, you're going to see what all that is about. In our next class, the Money Click program, you're going to have a good inkling into how that research goes on for us to arrive at what we arrive at. All right. Okay. So don't put everything in one place. And there's a word for it. Not putting everything in one place. I just want to know if I have students of investing here, right? When we say not to put everything in one place, I just want someone in the comments to remind me of what that is called. What is it called when you don't put all your money in one place? What it is called? Somebody who is a student of the Naira Academy should please help us out. Let me know if we are following, you've been following, because I know I've talked about it quite a lot of times before now. What is it called? Perfecto. I got it. Yes. Look at it here. Diversification. Thank you so much, ma. Diversification. Diversification. Yes. No, so margin of safety. Margin of safety is buying lower than the intricate value. That's what margin of safety is. Margin of safety is buying at a price where you do not have. It's buying at that price where you don't lose out. It's buying at that price where the stock, right, is selling at its low point. So it can only get better. That's margin of safety, right? Margin of safety is you buying at that point where it's at its low, right? According to I've forgotten the this forgetting his name. The particular author would there's something we call entry point in stocks. He will talk about when it's you have a curve that is in form of a cup, right? And when at the bottom of the cup, under the cup, the lowest part of that curve, that's the margin of safety. Right? So the margin of safety is at that point when you are buying that stock lower than what it is actually valued. That's the margin of safety. So when you decide that you're not putting everything in one place, you're diversifying. That's diversification. That's diversification. So instead of putting all your money in one stock, what we're saying is spread it across different companies, spread it across different industries, right? So don't buy only bank. Don't put your money in just one bank. So you can decide that you want to put your money in the bank, you want to put your money another one in another company that is into palm oil business, or you want to put it another one in cement, just diversify, or another one in energy, another one in consumer, because that is into consumer products, just diversify. Don't put all your eggs in one basket, right? This helps you reduce your risk. Number 7 is ignore noise and hot tips. As a beginner in the stock market, learn to ignore the noise. You will hear things like, this stock will double soon. Ignore them. You will hear things like, don't miss this opportunity to buy into this stock. Ignore them. You will hear things like, oh, insider information. Ignore them. Right? Peter Lynch would say, know what you own and know why you own it. Right? So if your reason is hype, if it's pressure, if it's fear of missing out, if it's the fact that your favorite celebrity or influencer talked about it, then you're not investing. Right? Number 8 is invest consistently, not occasionally. Don't wait for the perfect time. Right? So instead, invest monthly, make it regular, make it consistent, no matter how little. Just make it consistent, right? And when you make it consistent, it helps you build discipline. And it also removes emotional decision making from the picture. Number 9 is be patient. Be patient. It is in patience that wealth is built. At first, investing seems slow. It seems like, oh, this thing is not growing. 2 years like this, how much, man? 2 years, how much have I gotten out of it? How much? It seems like it's not growing. Just be patient. You will not see the big results immediately. But over time, small, consistent investment plus more time will give rise to powerful growth. And like I would always tell you, the person who has demonstrated this for us in the simplest of ways is Ronald Reed. Everybody should read the story of Ronald Reed, a janitor who started investing little by little into the stock market. By the time he died, a janitor, by the time he died, he had $8 million in stock investing. Right? That's the power of compounding. Number 10 is keep learning as you grow. Don't ever stop learning. Don't ever stop learning. You don't need to know everything at the start. You don't need to. But you must keep learning. You must keep learning. You must keep learning. And for me, the best book on investing for me ever is The Intelligent Investor. Also, another wonderful book is the book on common sense investing. That's another wonderful book that you can also read, right? These books will teach you how to think, not just what to do, which is most important. It's not just about what to do. What do I do? No. What do I do is not the reason why you are here. You're not here for me to teach you what to do. You're here for me to teach you how to think. I want you to know how to think. When you can think how you should think, you will know what to do, right? So the big mistake a lot of beginners make is that most people think investing is about picking the right stocks. Some people think investing is about timing the market. Some people think it's about making quick gains. But the real game is building discipline, it's building consistency, it's building understanding. So you don't need to be perfect. You just need to start. You just need to stay consistent. You just need to stay disciplined. You just need to think long term, right? The difference between people who build wealth and those who don't is just not knowledge. It's not knowledge, it's action. It's action. So take action. Take action today. Start like I charge those in the Money Click program. Open that investment account. Take action, right? So this is the time, right? It's the time for you to start. Start and then learn as you move on. Okay? Don't say that you when we mean take action, I don't mean you should buy now. I mean at least take the next step. Take the first step first. See, when you take the first step by opening the investment account, there will be that push for you to invest. And that push is the drive that you need to learn and understand how and what you should invest in. That's what we'll come to the end of the class today. The truth is, real investing is not about luck. Real investing is about becoming the kind of person who can build wealth over time. So it's about building you. It's about building you, right? It's about you becoming. You need to become. You need to think like an investor. You need to understand what it is to be. See, when you think, when you become, everything falls into place. You don't need anybody to tell you where to or how to. Everything just goes naturally. But for it to get that smooth, you need to get to the point of making it a habit, and that's why consistency is key. Right. So thank you so much, everyone, for joining us today. Yes, think long term and stay consistent and start now by taking the next step. Yes, please take the next step. Let your first step be to open that investment account. Just go and open the account. But before you open the account, before you make your choice, remember what you said about it. My name is Chukwemeka Ojenezi. Thank you so much. For being here. Yes, thank you so much, Madam Linda. Says the fear of the stock market had gone. It will, in fact, it would run farther away with more and more and more knowledge. Sometimes fear is just because we do not really understand. When you have knowledge, when you have understanding, you know that okay, I understand this thing. You have no fear about it. There's no fear at all. There's no fear at all. Thank you so much, everyone, for being here. Yes. The Intelligent Investor. Yes, March cohort people, the Intelligent Investor, we're going to be starting with that book next month, right? And if you ask people in the January cohorts, they will tell you a little bit about the book. Some people said that the book is harder than chemistry textbook in secondary school. I don't know why people refer to chemistry textbook as that. So there's one particular popular chemistry textbook, Ababio, in Nigeria. Some people say is harder than understanding Ababu. So I don't know. Maybe when it gets to your talk, you will give your own review about the Intelligent Investor, right? Thank you so much, everyone, for being here. I see you, Mr. Ayo. Yes, thank you so much, Mr. Joseph. Thank you. Thank you so much, ma'am. Thank you. I see you. Thank you. Thank you. Thank you so much. Yes, that fear will kill it too. It will kill it. Thank you so much, ma'am. It's always a delight teaching and teaching and teaching. That's what I'm called to do. Thank you so much, everyone. Yes, I see you all. All right, so that's what we'll come to the end of the class today. And remember, we're here every week, every single week. We're going to be back here again on Wednesday, right? For the Wednesday Instagram and Facebook live session, which is also broadcasted here on YouTube. And we're going to be back again on Thursday as well for the Thursday live session on YouTube, right? And remember that we're always here by 12 noon. 12 noon, we are here. Thank you so much. The time doesn't change, right? Unless something springs up and we're going to let you know, right? Thank you so much, everyone, for being here. Oh, I see microphone Empress. I hail you, ma. Thank you so much for being here. Thank you so much, everyone. Have a lovely day ahead. Bye bye.